Hi, welcome all to our webinar in 2021 on what to expect in this year. We're already in January of 2021, and in the coming hour we will address what we think are the topics on transfer pricing for this year, which we do from a conceptual level, but also we try to give you some pointers and more practical experience and maybe some advice from our side how we look into those items. And today I will do this with my colleague Richard Slimmen, and I'm Theo Elsoff, around 25-year plus experience on transfer pricing, been all around, Big Four, head of the APA team with the tax authorities, and now since 8 years, one of the partners of Quantera Global. And I'm co-hosted today with Richard Slimmen, who is sitting next to me on 4 meters distance, so we have certainly the 1.5 meter. Richard?
Yeah, thank you, Theo. Welcome, everybody. My name is Richard Slimmen. I'm also one of the partners of Quantera Global. Previously, I have been a tax inspector in the Dutch tax administration for 19 years, including the coordination group on transfer pricing, heading the APA practice, and also doing some competent authority work. We hope to give you some insights in our expectations for this next year, although obviously we will not be covering the full scope of transfer pricing for 2020. But we hope it still is interesting for you.
And both, we are more than 25 years of experience together, so we will try to make it also interactive as possible between our two. We like that, so hopefully you will also enjoy.
Yeah. Okay, so let's get to the next slide. What are we going to talk about the coming hour? We like to give a brief recap of the last year, 2020, and a summary outlook of 2021. After that, we go into some, let's say, topics in more detail, like how to deal with transfer pricing in a post-corona year, what to expect from the impact on Pillar 1 and 2 of the TP policies. Also, we want to spend some time talking about automation and operational transfer pricing. We think that is something of interest and will become more important for the years to come. We will end with a brief summary of the upcoming webinars after this one, and obviously we will address any answers and questions that will come up during this hour.
Yeah, we will see your questions coming up. You can put them into the system, and I'm looking into them, and then I will then try to see if you can get that question today and the answer to you, or that we maybe do it in separately offline. But that's something you will see. Hopefully, you have good questions.
Yeah. So let's kick off with a brief recap of what happened in 2020. 2020 was a very exceptional year in terms of, let's say, developments due to obviously the COVID crisis. But there has been more. We also had a Brexit that was pending. It has taken a while, but at the end of the day, there is this consensus, and hopefully things will just operationalize in that respect. We will address Brexit and potential TP issues in a separate webinar, so we will not dig into that in more detail today. Obviously, we had a very important guidance of the OECD in terms of the financial transactions early February, and it has provided some useful guidance on a very hot topic in transfer pricing for the last year and also for the upcoming years, we believe. Financial transactions are more and more getting attention, and good support and backup and substantiation of those transactions is becoming more important than ever. Looking at the above, the arrow, we have the Pillar 1 and 2 blueprints published by the OECD in October. In November, we have a public consultation document relating to BEPS Action 14, which is the dispute resolution guidance. And if we look below, we obviously have a lot of, let's say, developments related to COVID-19 on business. We had the publication of the OECD on continuation considerations for tax administration dealing with COVID impact. We have the extended deadlines of the DAX 6 reporting, obviously due to the COVID impact. And next to that, a lot of multinationals will have had considerations about how to deal with COVID, how to deal with the supply chain, whether or not to restructure, and all considerations attached to that are, let's say, behind us. When I say behind us, it's just the year 2020, because COVID still remains, as we all know. We're still in the midst of the pandemic, and companies will still have to adapt to the extent necessary and possible in looking and adjusting their supply chain, their TP policies in term with the future developments. That was a brief recap of 2020, which is already behind us, and in that respect, a bit less interesting. It's more interesting to consider what the coming year will bring and what we think are relevant topics to consider. And then we want to skip to our, let's say, crystal ball. That's on the next slide. And if we look at the crystal ball, we have identified some issues that we believe will get attention, specific attention in the next year. Obviously, there will be an increased focus on transfer pricing documentation, which is not new, but it will continue to be requesting a lot of efforts, a lot of resources from multinationals. And therefore, it will become important to consider how you manage those compliance issues. And that will have a link to the operational TP and automation issue identified. Maybe, Theo, there's also news on financial transactions in that respect.
That's true. I think what's changed besides the financial transaction report in 2020, which was really news, because that was an item that was long on the agenda of the tax authorities, how to deal with interest and financial transactions, also items like how you deal with everything around financial transactions, guarantees as an example, and debt to equity, etc. What is the leverage that's still possible and acceptable, and adequate arm's length standards? That's a study of the last 20 years, I believe. So there's a lot came together. So we had, since a couple of years, financial teams, which is mostly fully booked in that sense. And a new chapter will be that a lot of the interest rates is based on the interbank offering rates, the IBOR. We can know them as a LIBOR, Euribor, etc. And was this change that there was such a scandal about setting of those standards by the banks, that we are now looking at alternative reference rates, and that will be replacing LIBOR and Euribor, etc. soon. And it's not only that you have another reference rates, there's also a little bit different setup, like Esther for Europe, SOFR, all kinds of new abbreviations which we have to learn about. But that means that if you have financial transactions and you have to look at your rates, floating rates, because it are floating rates, then the basis then the new reference rate, and they are a little bit different. So you have to relook and rethink what is the basis of my interest rates and how to set it up. So that's something that's really important to look into this year.
So Theo, that would also mean that let's say existing intercompany agreements, loan agreements, reference rates addressed in those agreements will have to be amended some way or another to reflect the new reference rates once the existing ones do no longer exist.
Yeah, that's true, and it's not only including it in your agreements, but also a little bit different because set up. You have to rethink what's the basis and what does it mean for my extra margin on those reference rates. And that's only one item which now will pop up this year. But I think it is good to have a relook at your total financial transaction situations. That's something that's really important. I would like to come also on the increased focus on transfer pricing documentation, a little bit back on it, because what I see is that a lot of companies have made a massive investments in having paper. Yeah? And some companies have discussions on, you seem to be compliant, but you have a pile of paper. But the question is if that documentation is really compliant and will save you and defend you when you have an audit. So that's something which we might go into other items, but that's something also to look into.
Yeah.
I really don't think that if you tick all the boxes that you are okay. That's something which really is another point of attention this year. Really topic, I think.
Yeah, I tend to agree with you, Theo, in terms of ticking the box, as you say, in respect of transfer pricing documentation is only focused at, let's say, compliance. Being compliant, do I have a document? Yes, well, tick the box and it's okay. But rather than having a document, it's about, do you tell the right story? Do you identify the right transactions and how you are going to deal with them or have dealt with them in the year under documentation? So there is a focus already, and the focus will not be less in the next year. We do see already that documentation is being requested by tax authorities, and it will become more and more. So it's not just a document that's in the closet and every year you have to update and renew it as a nuisance, but it actually becomes a document that is being reviewed by the authorities and will be a basis for questioning.
And a new trend I'm seeing there is that in the past you were not frequently asked for your documentation, certainly also not in the Netherlands. But what you will see is that they will ask it more and more, and try to, via automated systems, try to select the victims for the audit.
Mm-hmm.
So and then I think it's good to rewrite or rethink your storyboard and the words that are used in your TP documentation. Seems silly, seems semantic, but I think that's really one thing to look into, because that could avoid some questions, so that you are selected from the big box of companies to talking into.
Yeah, I think that's an interesting view, Theo, in terms of sometimes it might be seeming less relevant whether you word it like this or that. But if there's, let's say, an automated risk analysis based on OCR type of scanning of documents, words used can use to be triggers to be identified by the authorities, and maybe selecting those companies that have a certain combination of triggers for audit. So thinking about how you word it in your documentation and whether or not you use the right terminology to address your issues, or just to avoid certain terminology may become relevant as those documents will be let's say actively used by authorities more than in the past.
Last year we had a webinar with on India, and there was explained how in India the tax authorities have massively invested in a tool to just doing this. Yeah. Because they see that they can't do all severe audits anymore. They have to select it better, and therefore they invested in a tool. But it's not only India. But I think that's enough for this topic. But what I would like to reveal here, that it is not only trying to be compliant and tick all the boxes and you have the paper, but that you also have to look into how you set up your story, what words you use, and what your compliance strategy is.
Yeah, and there's an easy bridge from compliance towards, let's say, a dispute resolution, because it's all in the same line. If your documentation will become the first, let's say, base on which you defend your position, it will not mean that you will be out of worries, because the tax administrations will certainly scrutinize that documentation. Will look at the, let's say, substance over form type of situations. So paperwork is not enough. It will have to be backed up. And we do expect, and we already had expected, but an increase of audits and disputes. We believe that has been, let's say, delayed for a while, because in the past year, 2020, most of the governments actively made a huge effort, by the way, to support their business in staying alive. And at that moment in time, it wasn't, let's say, really opportune to at the same time also be heavily scrutinizing those same companies. But once the pandemic will be overcome, and hopefully that will be somewhere this year, we will expect almost every country to reconsider their tax policy towards multinationals, and it is to be expected that they will look for money. Simple as that.
The story will repeat. I think I never forgot 2008. In December, I looked out of the window and I saw less trucks and ships passing in Rotterdam. And in 2012-13, then the recession started to come into a new life of the economy, and that also geared up the BEPS project at that time. So that was not a coincidence, I think, and I had the feeling that it will start again. Then we got all those documentation requirements and attention for the topic, and that could again happen 2022, 2023. So it is highly important also that your documentation on 2020, what you did, will defend you. And we'll come into that topic later on, but the corona itself as a reason for changing a policy or not adhering to your ranges or for your routine functions will not be sufficient.
Exactly, and we will go into that in a bit more detail later on. But for now, what we do expect is quite a substantial increase of disputes, and let's say that also brings back the effort being made under BEPS Action 14 and the consultation document of last December, where the OECD and the inclusive framework are actually trying to stimulate countries to actively increase and upgrade their compliance MAP and dispute resolution programs in order to being able to cope with that workload.
I think maybe some comments on that, Richard, and because I see there are a lot of confusion at the moment. I see a lot of systems being bought for having the Q&A and but I have the last month company file. Is it about the value intangible? Are you meeting the 50% threshold? There's a lot of confusion there.
Yeah, I think if you look at DAC 6, Theo, you have at the one hand the issue of identifying your whether you are able to generate your files and your case and evaluate whether you are actually having transactions that fall under the scope of DAC 6. But if you just put that aside, and if you look what DAC 6 compliance requirements will impose on multinationals, it's a huge compliance burden. In that respect, that companies will need to, let's say, generate the information available within the company in order to identify the relevant facts and circumstances in time to report to the authorities whether or not it's a reportable arrangement. So the internal organization of a company will become quite important in organizing and managing workflows and information, and that is besides the discussions and the interpretation of whether or not an intangible is hard to value, whether or not there's a decrease in profits to be expected, for instance. So there will be quite some effort and capacity addressed to, let's say, being compliant with DAC 6. Having a reporting tool obviously may support businesses in that respect, but it's only half of the work that needs to be done. If we look at the operational TP and automation, I think we have quite a vision of what that will do in this year, but especially for the next few years. Theo, maybe you can go into a bit more detail.
I will try. You get some reaction on my audio. I try to improve it. So for all the listeners, sorry for that, but I saw some reaction there. But let's see. Operational TP and automation. That's something that's on the radar of a tax department since 20 years, I think. I was a tax manager for 14 years, and at that time there was not Excel, and Word was only available. What you see now is that through the BEPS project, there was a lot of requirements for compliance, and there we got some first TP tools that could do something that looks like software. But nowadays we see more and more automation system coming up. Like us, we use Coperitas for everything on TP doc, which is really a great step. But also having your link to your systems, ERP systems and other systems, with all kind of data and information, and that total will give, I think, the tax department the next step in coping with the compliance and being in control on whatever they need on controls on TP. And that's something we advising companies on, and we see some already having it, and a lot of them looking into it. So I think if you not already have done it, and you think it would be advisable to have some software solutions, this is the time to have a look at it, and you will be surprised what's already possible. But that's something which we took 4 years ago as a challenge to have such a system and capabilities, and we see now that it was a really good investment, and that our clients are looking into. And I think each week I have at least 2 or 3 times a demo or a meeting with multinationals on that topic.
Yeah, I do agree, Theo. What's also interesting, I think, is what to expect from tax authorities on this level. So we have, let's say, operational transfer pricing, how you operationalize your TP policies within your administration. Is something that you can think about for your own benefit. Are you in control? But it's also becoming more relevant, I think, towards the authorities, because we see authorities more focusing on showing rather than telling. And if you're able to show that you're in control by having a good structure in place, being able to clarify and explain how you manage your exposures and your risks and how it's being implemented in your administration, it will certainly help convincing authorities that that you may be a low risk taxpayer instead of a high risk one, and that is the first step in getting selected for audits, for instance.
Yeah, what you see is that that a lot of tax departments are trying to cope with the information which need to be in the documentation for most of all the financial information, like segmented P&Ls. There will cost basis, etc. And that are items that are easily can go wrong if you do it Excel based and you do it on one day trying to allocate items, and therefore it is far better to automate it in a way that is linked to your data, which also can help you in an audit and an audit trail. And what I'm seeing now is that tax authorities are more and more looking into that field, and also in the Netherlands. So it's really going the way that is don't tell me but show me. Yeah, that's really also a couple of years happening, but that also will be the part that will go into your financials.
Yeah. And if we then look at the crystal ball a bit further, we also see Pillar 1 and Pillar 2. And to be honest, Theo, I have been hesitating to put it on there as a crystal ball for 2021, because I think the general expectations are that although they will not go away because it's let's say too important of an issue, but it's not really likely that 2021 will be the year that Pillar 1 and 2 actually become final, and practice will know how to cope with it. I think a bit more realistic expectation would be that perhaps 2023, 24 may be realistic to expect final measures and approach to those topics. But still, formal planning is that in this year there should be or would be final reports on Pillar 1 and Pillar 2. So it's in there, and it's certainly an important topic because it will address, let's say, the sharing of tax revenues across the globe. But it's to my opinion at least not really realistic to expect final regulations already this year.
Yeah, I think one item that was surprising to me is the marketing and sales service activities, so baseline, which are more looking into a percentage of turnover than a cost plus. So it seems there that everything that's happening on Pillar 1, on the value of the market, will also get into those kinds of structures. So I have a couple of clients that have a cost plus on that field, and the question is that still viable? So that's a discussion that is really now on board. So there are also trends in that Pillar 1 that you already have to see as something that you maybe should address, and that is one of those.
Well, I think you mentioned something that's worthwhile addressing a bit more in detail. What to do as a company in respect of Pillar 1 and Pillar 2. If I say on the one hand, it could take 2 to 3 years before it actually becomes a final, and you need to deal with new regulations. So should I just wait and see instead of prepare myself? And I think that might do for relatively small companies that can adjust quickly. But if you're a large multinational, you cannot do without a let's say an analysis of what the impact should or could be on your organization, because changing it or adjusting it to a certain way that would be more obvious under the new potential guidance or regulations takes time. So large multinationals nowadays will need to evaluate and consider the impact, potential impact already.
I had some discussions with a couple of those, and they are really going into scenario thinking. But nobody knows exactly what will happen. But still, it is seen as a corporate income tax item, and obviously you can also get a credit in other countries, and there is more to it. It's really complex, but in fact, it is. I see it as a sales tax item, but there's a credit behind it, so it is more complex than that. Okay. Maybe we can go into another item, but I got one question about the Brexit. Clients are always telling that that will be a big in the disruption of their value chain. But nobody at the moment was willing to look into the TP. They say, let's first await COVID and then see what to do with Brexit. And to be honest, I don't see. I've had a lot of discussions on what Brexit brings. And by the way, it is just that the EU and the UK had an understanding about Brexit just before the closing. So, but I think it is good to already see into it. But I till now didn't have any discussions or questions about it.
Yeah, I cannot say that I have had them myself. I think a lot of companies are just waiting and hoping for let's say a smooth transition that also would not provide for too much adjustments in their supply chain. But you already had a lot of companies preparing themselves with reallocating stocks and warehousing, just to make sure that the logistics could, let's say, continue and not being disrupted too much when all the new regulations would require a lot of more hassle and formalities, which may lead to delays.
Mm. I think this is the crystal ball slide. Like
Yeah.
last time, it took a lot of time to go into those items. And I think it was necessary. And now we go into the more slides on the topics and try to be more practical on those items. The first one is transfer pricing in the post-Corona year. Yeah. So what to do after the Corona year and how to deal with it. There are some questions already coming in, what to do with COVID-related costs and how to apply those in your policies. And that's a difficult question because I don't know what COVID-related cost could be. That could be a lot. And how to deal with it. I think if you look at the principles, I think that the arm's length in times of crisis that doesn't deviate from the arm's length principle, how to apply it in normal times, because it are extraordinary items. But the question still here has to be answered: how third parties would or behave in those kinds of circumstances, and what they would agree to on prices and conditions. That still is the same principle. So the comparability is key to analyze the comparability factors and to decide how to deal with the COVID challenges. And right to that text, you see that there's a link between the function and the risk a function has and the reward. So simple terms, routine function without a risk has a little reward and not too much possibilities to get a loss. If you go to more risky function, then that you have more possibilities. But no, I always say nobody can escape market risk. And really, I think Corona is a market risk. It is maybe extraordinary, but a market risk. And then you should ask yourself how to deal with it and how third parties would behave.
Yeah.
And document it. And that is maybe a simple answer. The difficult answer is that you have to look in the comparability factors, like your industry, because some industries are hit very badly by the COVID-19, and other industries are really benefiting from it. So it is for comparability factors very important to see in which industry you are, how they are hit, and then look into when parties are facing COVID implications, how third parties deal with it at the moment. So myself, I'm looking at the industries, what they're doing on discussions on rent, discussion with suppliers, and you see that all kinds of possibilities there appear. Yeah, and that could also for you be an extra documentation for your decision how to deal with it.
Yeah, I think if you look at the the impact of a crisis, the pandemic like COVID-19, on transfer pricing, it can be substantial. But as you say, it doesn't, let's say, take away the principle itself. The principle itself is looking at how third parties would deal with it, and obviously also third parties deal with this crisis. And in that respect, it's a good thing that there is also on an international level some attention to this issue, and the OECD has provided some guidance on the implications of COVID-19. What we see there is that there is a strong, let's say, positioning that the arm's length principle as it is remains valid, and is not to be discarded due to the COVID crisis. There is a lot of practical difficulty when dealing with COVID. And you already mentioned, Theo, that one of those challenges is how to establish third-party behavior. And I think you also mentioned another thing that is sometimes overlooked, because everybody automatically deals with crisis. It hurts companies, but you already pointed out correctly, there are also quite some companies that have been doing better than ever before, because COVID actually stimulates or boosts their practice. So we will see companies that have better results than ever, and we will see, and that's likely to be the most part of the companies that are, let's say, facing challenging times. But there's no one size fits all. And COVID may be a boost for business, but it can also be a threat of business. And it depends on where you are, what that impact might be for your organization. And looking for third-party evidence on how to deal with the issues will become essential. If you look at the guidance that the OECD provides, and we will not go into all the details, they focus on comparability, obviously. It needs to be more than just a reference to the crisis. Everybody knows there's a crisis. Everybody knows there's a huge impact, and everybody knows it's been hardship all over. But that alone will not get you away with as an argument to adjust any TP policy.
No. Therefore, I think it is good to set your strategy there, because there come questions in normal times. You had more an Excel-based routine remuneration, and all the residual goes to the principal. Yeah? Now in time, and that was also defended by the main argument. There was a low risk, so they have also a low return. But it is not no risk, and that's something that some are forgetting. But the item is your strategic risk management. Are you daring to go into that discussion? I think if you have a industry you're in was really severe hit by the COVID, then, and you are looking for cash, that's something that some companies really are doing in the last year and still, then it could be argued that also routine function, although limited risk, has a risk. And that you documented it on two fields. First, on your industry and maybe third-party behavior, what you see, and maybe you also have also that kind of discussions with your suppliers or customers on that field, like a famous company in the Netherlands on warehouse and sales company had with the suppliers that they say, for this year I'm not going to pay you on time, or getting the goods ordered like before. So that those items happens. That's the industry. And secondly, also looking into your benchmark exercise, because it's not that the benchmark will give you the outcome desired if you are doing nothing on your strategies in the search. You should also look into if your strategy for the search is still valid for your industry. So, as an example, loss companies for those years could, in a normal strategy, taken out. Why? Because that is seen as some maybe signal that they are within a multinational, so related. But in times like this, a loss, and maybe for 2 years or 3 years, could be not in your industry something that happens more, and that companies still survive, and that, of course, they do everything on the cash management. And that will mean that also on your benchmarking, you could have a look into, and if it is maybe possible to already have a benchmark again, but then with a different strategy, so that you have for comparability on your setting of it, and your functional analysis, and in industry you have a defense, and in your benchmark you're looking also for a defense. But if you don't change your strategy, I know in 2013 and 14 we thought that the markups would be lower, etc., but they were higher, and that was because I think, and I didn't have a look into it, because all the loss-making companies were not anymore alive or rejected in the benchmark exercise.
Yeah, and exactly that is something that is different in the current climate crisis, I think, because a lot of companies are being kept alive due to a lot of government measures.
Yep.
So it's difficult to make that assumption. I do agree with you, Theo, that looking at your benchmarking exercise, a lot of the benchmarking strategies, so the search strategies, have been developed in a situation where it was a reasonable assumption that let's say a structural loss-making company might be or could be expected to be part of a group, and therefore a related party, which should be eliminated. But in the current climate, a loss on its own is more standard than the exception in a lot of industries nowadays.
May add something which also in the last crisis did. It's normal when you have a sales organization as a third party and your revenue drops to 40-50% lower to the COVID, and you have problems, that normally your marketing and sales efforts should also be lowered, and that they downsize everything. And the moment that you as a multinational say to your sales limited risk distributors or sales agents that they have to keep to the market, then they make those costs. That would be an example of something to look into, because that are COVID-related costs. You could see them as such, and then see if that would be a reason to support them in that field, because a third party normally would lower their activities in that field. And so that is something to also maybe see into as a possibility. And
Yeah.
so and don't. And that's one of the many, but that are items that you also could look into.
Yeah, I think in general, what I sometimes hear in discussing the impact of COVID on potential companies, there is a bit of a consensus about obviously you need to deal with it the same way as third parties do, and the challenge will be on identifying the third party behavior. The guidance of the OECD, maybe you go to the next slide, that is making more like the same statement. It's still arm's length principle. There have been a number of issues identified, like comparability, like allocation of losses, how should limited risk companies be impacted by the crisis. And although the guidance is of general nature, and it's not like you have the answer right away, it will provide something to hold on to when you build your storyline, when you build your argumentation. But I think what you also need to establish need to remind when looking at that guidance is the strong, let's say, pushback in terms of there needs to be evidence. The guidance doesn't say the crisis in itself already is an excuse to adjust existing policies. If you want to exist, there may be right reasons to do so, but there will need to be evidence. So you will have to look for that evidence, and whether it applies or could reasonably apply to your organization.
And there's also political elements in it, also like always, but now certainly, because a lot of government assistance programs have something in it that aid shouldn't be given to the principal or to the one that you perform the service to, and that will be also an item. On the other side, the tax authorities want that's routine activity still gets that percent on revenue or cost plus. And on the other side, you have the assistance programs. So how that interrelates with each other and how to solve it. I once had a service provider with a cost plus, got the aid, but if they would get the cost plus as agreed in the APA, then they were not allowed to ask for the grant for the government. So they were in the squeeze, and such items will surface and come up, I think, in this year and next year when tax authorities have a look into it.
Yeah. I think because we need to speed up a bit. Most important part is COVID may have an impact on your TP policies. The guidance and the international references that the OECD makes acknowledge that, but you will have to build your case in more detail.
I still have nice questions. If you see a massive transfer price risk during the preparation of your TP documents, would you then still go for an APA? That's always a coin of two sides. The one side you have a massive risk, so certainty will give you a lot of add value. On the other side, the risk could be so high that you have a problem obtaining an APA or the update that you would like to obtain. That's I find that I find this in this kind of times intriguing question, because a lot of companies ask me, like last for one of the US, are you still in favor of an APA? Or do you think it is better to not go for the APA? In the end, we are now in the APA process and it's going well. But that's because they want to be in control and manage their risks. And an APA is, I think, a good way to do it.
Yeah, no, I do agree, but again, Theo, there's no one size fits all here. For some companies, an APA may make less sense at this moment in time, whereas others may use the APA to, let's say, discuss and agree on a reasonable approach to deal with the current situation. And maybe some adjustment mechanisms to take into account, but everything that's not black and white can be discussed. And an APA is I think a format still, and becomes even more important in the future, I think, in trying to obtain a level of certainty for a company in respect of its most, let's say, pregnant risks.
I agree on it. I think that's no size fits all here, and sometimes it's better to have a documentation position or an APA, and that could also depend on the country in which you would like to get the APA. I think that will certainly depend on it, but that's something we can look into. Okay. A matter of time, because I think APAs and everything around is really a matter that is really tick my box. We go to the other boxes. That is the question here. Companies with an adjusted TP policy are the first companies that will be scrutinized by tax authorities.
Well, a nice statement. I can say I tend to agree that at least it will be a red flag for any authorities. And so it's not rocket science here, but what I do think, you could also think of the other statement. If a company does not amend its policy due to the COVID-19 crisis and the massive impact that it may have, there's always this other tax authority looking at the same transaction that may have still an argument that say, why are you not amending your policy, because we see third parties doing it like that. So you might even think about whether you do it or not. You will be facing the risk of being challenged, whatever decision you make.
Yeah, that's a good one, because like the residual owner, the entrepreneur who got the positive side, let's say that everything got this cost plus and sales percentage to the roof, and then on the headquarter level, that's mostly headquarter level, you get a result that's so negative that you really have to explain what happened, also in COVID time. So there's always the other side of the coin here. Yeah, that's true.
And that's just another statement of you will be well off if you prepare for a scrutinize and audit questions by tax authorities.
But for time's sake, let's go to
Yep.
the next one. Yeah.
So then we're at pillar 1 and pillar 2. I think this is not the place to go into a lot of details on those pillars, and I expect a lot of participants have pillar 1 and pillar 2 explained to them or reviewed in more detail.
Mm-hmm.
As already mentioned, there's no consensus reached yet, and my expectation is that it will take a bit more time than half a year to get that consensus. But it will have an impact. It will have another level to global profit allocation, and it will not go away. I think it's a matter of time, and it may be adjusted, but it will not go away, and we will have to take it into account. Both pillar 1 and pillar 2, by the way. And hopefully there remains a bit of coherence and consistency and a conceptual approach that makes sense.
Yeah, but I think the driver behind is that companies want to have something for their market in the digital area. More and more is certainly now is ordered by email or by a system, and comes from somewhere and goes to a customer. I ordered in the weekend my Belgian beer to such a website, and really I saw that it came in today, so it's good. But nobody sees me in a shop anymore or in the country of Belgium. So that will change the whole system, and then that will not go away. And if it's not is agreed soon, then more and more countries will make their own measures. So some already have done it. So you already have to look into it now.
And that is, I think, the largest risk is that countries are keeping their let's say individual approaches, measures, and more countries will join them when there's no solution soon. So a consensus to be reached, yes, it's the preferable option, and hopefully it'll come soon. But then again, practice is likely to show that it will take some years still.
Yeah, it's heavily complicated, the whole thing. Yeah.
But I think looking at the next slide, a major question is for instance pillar 1 the end of the arm's length principle as we know it at this moment in time?
Okay. I'm a little bit laughing about this statement.
I know. I see you laughing.
Yeah, I think transfer pricing will not go away, and it's also for the business an important mechanism to delegate and make parts of a company responsible. So this anyway something in your administration, and it will also, I think, have a lot of value for discussions between countries, and also for the companies how to deal with it. But the pillar 1 is the beginning and the start of that countries want to have something for their market, for the value of the market, and it's very difficult to get an answer to it. So they should make like a percentage. That is what they're doing at the moment. Nobody knows, and that's something that will affect, I think, the discussion. But more or less as a point from this is the value of the market, and then we go again in the transfer pricing debate.
Yeah, I think we can cut it short and say, well, pillar 1 isn't the end of arm's length transfer pricing as we know it, but it's more like an additional measure to cope with the practical difficulties in allocating value. to certain countries.
And by the way, I've ordered nice beer, so
That's good. So we're gonna drink and then once it's allowed again. So maybe for the sake of time, and it still is an important part of future practice. Let's talk about automation and operational transfer pricing, Theo.
Yeah. I think I never forgotten the statement of a client, I think 20 years ago. Yeah, on that field. I think we are going to operational transfer pricing now. That's a good slide. Yeah. Never forgotten a remark. I helped the company on having a TP system exactly aligned with the new strategy. Intercompany agreement, made all the documents, how to build up the TP methods, etc., the definitions, and then the CFO said to me, "I still don't have anything." And at that time, it was a long time ago, I was a little bit puzzled why, but he was right. There was nothing in the admin, in the invoicing, in the reporting, and management system. Everything has still to be done. And that's in the main what operational transfer pricing is. That is it implements your transfer pricing system in your administration, your data, invoicing, reporting. It organizes how it impacts also your management reviews. And that's something which we are now more and more looking into. The management of transfer pricing data, the processes about it, and also the governance, so the controls and the risk management in it. That's it. Not more, but also certainly not less. And that's more and more of an importance. And why? Because also tax authorities are looking into it far more. So though you don't say you have a benchmark and your cost plus is in the range, but they would like to understand if you have implemented on the way it should be.
Yeah, and I think the phrase "it's good to tell me, but it's better to show me" very much relate to operational transfer pricing. So being able to show that you have actually organized your administration, managed your ERP system in a way that it actually operates the policy as you intended, and that at the end of the day the figures match. That is something authorities are also starting to look more closely to.
And there's also alignment with also your stakeholders within the company, your business people, your business controllers, your management around it. They are more and more asking, is it fair what happened?
Yeah.
Because they want also to understand it, and are they treated fair with the system? And there's always a discussion between transfer tax books and management books, because it doesn't have to be the same, but still they are affected with each other. And that's something that operational transfer pricing then is the way to make that clear to everybody. And maybe as a next step, is also important and more on the table, because the whole compliance burden and show me instead of tell me gives at the moment the tax department so much a hassle and a burden to deal with it, that operational transfer pricing is also linked at the moment with software solutions.
Yeah, I think, Theo, one of the worries that I have heard and discussed with people when thinking about the use of tools, I come up across a number of times where they may be very enthusiastic about a tool and what it can do, but they are still hesitant. And why is that? Because they are worried that they will not be able to, let's say, gather the relevant data that needs to be implemented in that tool to work properly. So the conversion from your big bulk of data and just identify and being able to organize the data in a way that you actually can use it in another tool. What's your take on that?
That's true. When they are afraid of the IT department, they are, every time need to get their real data, and when there is a change in the ERP or financial system, that they need the IT system department again. And to be honest, in the last 5 or 10 years ago, we had some software solutions, but really they were not doing what they should be doing, and what your told that they should be doing. It is like the old printers that didn't work, and at that time also software was not working for you. But nowadays, I think there are new software systems like we developed, but I see more, but that can do it. It can really make your life easier. And then coming to your questions, if you then go into the data for your systems, there are real at the moment new software possibilities and systems and people that understand it, which can help you by looking into what the process could be that really works for you. So from looking into the current process, how you get from data into the systems, how software could help you, and a good process could help you to get that organized, and that content then go into a software tool like us, and as a content manager can help you. So 2 or 3 years ago, I was like most of those people, very hesitant to say that it will help you. But what I see nowadays makes me more laugh a little bit about it. It's really
so it's like a twofold consideration. You need to consider what tool suits your purpose, but you also need to consider, are you able to, let's say, fill that tool with the appropriate data? And maybe Theo, a term that regularly pops up nowadays is robotics. And to be honest, I'm a tax lawyer. The first time thinking about robots, obviously I was thinking about little tiny tin men that walk around and do a lot of stuff. But obviously we are talking about software here. We're talking about little software programs that actually do something very specific, but still help you organize your data in a way.
Yeah, and obviously you can still do it with Excel sheets. That's also a way to work, and a lot of companies still do it. But you will see that some companies, I know one company that have automated all their processes in the business, whatever, because 6 processes or more, and they are automated by a robot. So everything, it is like a virtual assistant, a virtual employee that does all the things, but then are automated what an employee does, but in maybe 5% of the time and 24/7 a week.
Yeah.
And that kind of systems are also available for the tax function. And
available, Theo, or built to tailor the needs of a specific client?
Yeah, all RPA, robot process automation, is tailor-made for a certain process and a function, but that's something that's done, and it can also be a solution for a tax department. But it also can be a different way of getting the data into a content management system like we have.
Mm-hmm.
But that's something we can offer the companies to see if what's the current process, what could be the process, looking at all those kind of solutions, and then see what's your process. Because yesterday I had a discussion with a company that would like to have a solution for the local files. They do it on Word and put Excel in, but and then our system on TP solutions could be like Peritas could be the first step. And then as a second step, look at the total process and then take all the nuisance away and the manual work that can be done by such a robot.
Yeah, so I think the way I understand it, Theo, is that because of the huge increase in the repetitive operations, repetitive documents that need to be made, you will have to organize yourself or like to organize yourself in a way that it takes as little as possible of your team's capabilities.
Therefore, I would like to go back to that 20 years ago and help the CFO with that step, but it's not really possible, and that doesn't have to take months or a very big sum of money. It is just looking into what's the next step, what is your way to look into 2021 and next years, and then decide on what's your process and what works for you.
Yeah, so it's more like thinking about your processes first and then see how you can organize them as efficient as possible.
That's the best way forward, but some tax departments say I need urgent now something for my filing, for making documents, but that also could be a first step.
Yeah.
But this is like everything. Don't do one and don't do the other one, but think about both.
Yeah. So that brings us to the next slide. Automation is necessary to become or stay in control and manage your transfer pricing risk. Do you think that's a fair statement, Theo, or is it exaggerated?
I think it is not for all, but I think you should look into it because it makes your life. I always say that every function in a company has software solutions and help them to make their lives better and really do the value add work. And this is something also for the tax departments. Just go into it, look into it if you don't have it already, because I think in the end you would like to have the time available for the value add, and not for typing in your Word file really the same text as last year.
Yeah, no, I obviously I do agree, and I think there are two types of managing risks here. It's your external risk exposure, so being able to show and illustrate how you deal with certain issues and that you are in control and there's a process behind it. But it will also be relevant for tax departments to have this internal stakeholders being managed and being able to clarify and show that you have dealt and given it proper attention will also help in convincing people that everything is within reason, obviously, addressed.
And it depends on the company how much you ask to be in control. But certainly this is something that will only get more and more attention in the coming years if it is already not all is happening. So please have a look into it. And I'm a conceptual guy and I would like to stay away from software. Really, they say something when I'm coming nearby software, then you have a problem, but that's not the case. But I really like this development. So it's really a next step in gearing up your tax function. Really a next step.
Okay, I think for the sake of time, let's go to the last slide with considerations. I think when we discussed a lot of topics for this last hour, I don't think there's a conclusion to be taken. I rather pose some questions that everyone should ask themselves. So, what is the impact on COVID-19 on my business and my TP policy? Why do I stress my? Because there's no one size fits all. So give it some proper attention. Are you being hit, and can you do something with it? How can you do it? Did you spend proper attention, and did you spend proper attention in gathering and maintaining the relevant data that may support your storyline there? Another question could be, what should be included in my TP documentation for 2020, which is a very special year, and all those changes or adjustments or amendments, albeit, let's say, forced or voluntarily instigated, related to COVID or not. If you look at the OECD guidance, there's also this warning: COVID should not be, let's say, abused to make changes that don't have anything to do with COVID, but it's being used as an excuse. So, what should I take into account in my TP documentation? Have I been properly taking it into account? Can I still maintain my regular documentation, or should I make additional efforts or gather additional information specific for this special year? What might be the potential impact of Pillar 1 and Pillar 2 on my business? And should I prepare myself? Can I prepare myself? And how should I go about doing that? Questions that we don't have an answer to, but it's good that everyone would ask this question relating to its own business. And obviously, a very general question: am I in control of my TP? And that means, do I actually have a process in place that makes that I can meet deadlines, that I can be compliant, that I can show and explain that I have not only a policy, but that I also have an implementation that makes it operational, and that it's all aligned.
And maybe on the last one, as I said before, I see a lot of paper being made and done. And also ask my questions, do you have the right paper for today and defense for tomorrow? And that's something sometimes lacking in the documentation I'm seeing for companies that are really done a lot to get compliant, to get the paper in every country they need. But there is not a defense in it. And by the first question, you could already have a hiccup on the answer. Yeah. So there's really also to really consider, are you in control on that field as well? It's not only automation.
Yeah. Now, control obviously is more than just having a document. The document actually should also contain relevant information and backup and substance.
Yeah.
To that
just
issue.
Saying there's a lot of investment went into having it. And maybe this is the moment, and also with COVID, to see if you have the right storyboard in it and the right wording in it.
Yeah. And I think, and I know you agree with me, Theo, when I say it's good to have everything in place, but it's sometimes even better to have nothing in place than having a wrong document in place.
I agree. I never forgotten a company that had this in a contract that the exchange rate risk was for the principal, and that it was in the accounts for the routine functions. And so that's something not that you don't want. That's a really, that wasn't a very obvious one.
Yeah.
Okay.
So I think we're already over time, so let's finish up. I only want to make a brief reference to some upcoming webinars on additional topics that are of interest. Yeah. They're shown on the slide. Obviously, they will also be on our website and will be published and promoted along the way. Yeah. We invite everybody to join them. Hopefully, this had already also this last hour was of interest to you, and even if you have just one or two items that stick and that may help you in dealing with your issues, that would be a success. Okay. I think I want to thank you for all your attention. Stay safe, keep safe, and hopefully we will have an opportunity to meet in person sometime near future.
And then hopefully with the beer I ordered.
The beer is being organized by Theo. Thank you for your attention, and until next time.
Okay, bye-bye.